How to Trade Volatility and the VIX with Don Kaufman. I'm your host and trader tonight, Don Kaufman. Welcome to tonight's presentation. We're going to be discussing, obviously, volatility in the VIX. Before I get too detailed into that, it's a risk disclosure. We're not financial advisors, nor a broker-dealer. Please, I'm not going to read all of this, but I do throw it up there because I spent a very long time in the brokerage world. A lot of people kind of assume that I am still in the brokerage world, but no. I was more than happy to hang up many of those licenses after a lot of years of having the licenses. Copyright disclaimer, this is ours. This is not yours. But I really throw this up here. It's got our email address on it. I always tell this to people, and they're like shocked, like, hey, email us. We answer emails, right? support@TheoTrade.com. We use kind of a central inbox, and if you ever need to get a hold of me after this evening, and as I said, I'll answer emails. It's a good thing. But if you need to get a hold of me after this evening, just support@TheoTrade.com. And we also have got our phone number on there. Again, based out of Scottsdale, Arizona. This is a little bit about me, a co-founder here at TheoTrade. So a quick rundown. I started trading in the late 90s. And I started trading in the late 90s. And how did I get involved in the business? I had family that was involved in the business, trading out of Chicago. Anyway, I went to Chicago 3 weeks after coming out of college. I didn't do a degree in business. I had a degree in molecular genetics. I always tell people you want fries with that. Long story short, 18 months after started trading, I met some people. They said, hey, you want to work with us? We're starting a brokerage firm. And okay, sounds good to me. That brokerage firm became what was like the leading brokerage firm for options. It was called thinkorswim. I was there almost from day one. I was there when we took the company public in 2007. I was there when it was acquired by TD Ameritrade. And I actually went on to run education. I was the director of the traders group for TD Ameritrade for about 5 years prior to finally hanging it up. And that was only about 3 years ago. I hung it up. It's actually 2015. The beginning of 2015 is when I hung it up at TD Ameritrade. Just had enough of the regulations and so forth. So I do know TD Ameritrade fairly well, but it's not the only brokerage platform that we use. And I know thinkorswim fairly well because I helped build a lot of the features in there. So it's a little background on me. I traded also, just because I was in the brokerage business, I traded extensively and more on the retail side as I worked there than I ever did prior to that. A little background. This is also, done the CNBC tour, been there, done that. Again, this is like the favorite opposition. So if you're going to get pitted against somebody, you want to get pitted against that guy. Fun stuff, Mr. Wonderful. A little bit about TheoTrade. We specialize in education. Stocks, options, futures. We do trade some currencies too. We're founded by professional traders, okay, and trading educators. Everybody on our crew, 15 years minimum experience. We don't hire anybody here, okay? And that's 15 years trading experience, verifiable. That's extraordinarily important to me. A lot of our instructors have a lot more than 15 years under the belt. And I also would like to reiterate this throughout the course of the presentation. We're here to help you mitigate the risks of the market first and foremost. You're going to learn a skill set, though, that can last a lifetime. Now, the other thing I like to point out right up front, TheoTrade, I think it differentiates from when we're building TheoTrade. We didn't want TheoTrade to be, hey, it's the Don Kaufman, show. Not at all. I want TheoTrade, again, we're extraordinarily well-versed and well-rounded with different genres of trading. I mean, I like to kind of call TheoTrade the Netflix of trading. And the reason I say that is, you don't come into TheoTrade and be like, well, this guy just does this. He just trades options. I trade a lot of options. I trade a lot of stock, though, too, but we never get pigeonholed. Why? Because this is the instruction staff, right? Nobody, anywhere, for any amount of money, has an instruction staff like this. This is Jeff Bierman, analyst trader, former chief market technician for TD Ameritrade. That's a highly coveted position. If you've ever been on the thinkorswim charts, that's the man that decided most of the studies that go on there. Over 300 of the studies that belong on thinkorswim are pretty much out of Jeff Bierman's head. He was more than happy. When I left TD Ameritrade, Jeff actually worked in my group. He was first one to come out with me. It was great. Then we have Matt Williamson, market neutral premium selling option strategist. He's a non-directional guy. Never looked at a chart in his life. So we have a market technician, a non-market technician, Corey Rosenblum, resident swing trader and our senior strategist, Brandon Chapman, our newest, okay, instructor, Brandon Chapman, CMT, macroeconomics, technicals and fundamentals. He's kind of into what they call fusion, which is fusion between macro. He's absolutely staggering at global macro. Global macro is his thing. Then we have Slim Miller, cyclical analysis, 43-year veteran. Last but definitely not least, Tony Rago. That's our intraday strategist, predominantly trades Nasdaq futures. So this is the team now. We are, again, 7 instructors that are full-time now at TheoTrade. So tune in, turn on, because we've got something for everybody here. What you're going to learn in this presentation tonight, you're going to learn a little bit about trading volatility. All right, and which is extraordinarily important, of course, in a marketplace that right now is assumed to have no volatility. But we're going to learn how to create volatility-based trades. Right? And what would you say about volatility right now? Even if you don't know, okay? Even if you don't know what volatility is, right now you kind of know, you're like, I think volatility is low, and you'd be right. And it's actually opportunistic, hence why we're hosting this presentation this evening. We host a presentation on not what we want to talk about. We host a presentation. What is opportunistic right now? What can you use tomorrow in the marketplace? I'm going to give you a strategy. We're actually going to look for trades with a risk one to be able to make 4, okay, with no upfront costs. And it sounds amazing. It's not, okay? We're actually going to look at what's called a VIX volatility spread. We're going to see how detailed understanding of volatility can provide advantages in all of your trading strategies. We're going to discover how trading VIX options can help reduce portfolio risk. If you got an IRA, great. 401k, got you covered. And we're going to discover, obviously, a strategy, and the strategy is going to be called the VIX volatility spread. The VIX vol spread right now, it's being used by every big derivatives firm out there, okay? And this is a strategy that, okay, I don't mind saying this. I adapted this strategy directly from trading firms. The way that trading firms do it, there was a lot of margin involved, so I adapted the strategy to be much more friendly for all of us. Now, let's get right to it. Why do you want to trade volatility? Now, you might be watching this live. You might be watching this recorded. I don't care. You need to answer this question. Why do you want to trade volatility? You're like, I'm not even sure what volatility is, man. Okay? Most people understand volatility, all right, to some degree. But, you're like, volatility's low, volatility's high, volatility's insane. But what I want to ask is, do you intend to use volatility to reduce risk of a portfolio, like a 401k, an IRA, or a stocks portfolio? Or are you just trying to profit, okay, in case markets just crash and burn? And I think either one of those is fine. But, by the way, these are not rhetorical questions. I'm like reading the chat room over here, and somebody's like, I don't know. And there's one, like, there's one thing that comes up. People are like, well, I kind of think I want to do both. And I'm like, wait a second. If you have a portfolio, do you think the market's going to tank? No. You're either somebody looking for big profitability, or you're somebody that's just a hedger. And that's fine. But I want you to actually make the distinction. Are you trying to cover your, proverbial behind, or are you actually looking to hit one out of the park? This strategy that I'm going to display tonight will actually work for both of those. I just want you to think about that a little bit. Boy, it's quiet in the chat room. Again, chime in here. Are you a hedger, or are you a prophet? Right? That's it. You just, type one of those in and talk to yourself about it a little bit. Okay? I like that. Somebody, option B. All right. You're just trying to profit from it. There's nothing wrong with that. Okay? Babe Ruth. Sweet. Okay? Babe Ruth. Obviously, they're trying to profit from it. Okay? Good. That's a good thing. Now, moving on. You need to understand a little bit about volatility. So whether you're trying to reduce exposure, because the strategy, again, that I'm going to deploy, you can use it, for one or the other. You can come in there and say, I'm a hedger, and I just want to cover myself in case the markets do tank, or you want to profit from the rise in volatility. Literally, everyone involved in markets can and should have a finite understanding of volatility. Okay, it doesn't matter whether you're trying to reduce exposure or profit from volatility rise, right? But you should have an understanding of volatility. trading volatility products. Trading volatility products, it seems really, really straightforward, right? But have you ever viewed some of the volatility products? People always talk about, I like this ETF, it's called the VXX or the UVXY. But have you viewed it over the past 3 years? Buying any volatility product outright is a pure recipe for disaster. It is easier, just take your money and flush it down the toilet bowl. It is easier. Most volatility related products have actually lost over 90% of their respective values in the last 3 years. This is a screenshot. I took it today. The decline of any volatility product is inevitable as the products themselves are based on volatility futures. So the first thing that you learn about volatility this evening is that volatility, if you buy it, okay, why do people buy volatility? So I would just want you to think about this. You buy vol because you think it's going up, right? That's an arrow. You buy vol because you think it's going up. Yeah, but volatility is a declining asset base. It decays. Volatility literally decays just like an option decays. And very, very few people are aware of that. Volatility, okay? Vol decays over time. And that is where so many people just get like what I call caught in the crossfire. By the way, if you missed this down below over here, let me just highlight that for you because it's quite amusing. But yeah, that's almost 94%. That's only a 3-year of the VXX. It's horrible. And the other irony is right in here, this was the beginning of this year, the VXX, it spiked for like a couple of days and then just right off again. So that's after the big volatility spike. Nothing, people. So before we go any further, though, what is volatility? Let's just talk about volatility in general. This is a slide that I have used time and time again. So everybody kind of like talks about a product called the VIX. We're going to talk about the VIX today. We're actually going to trade a little bit on the VIX. So you have this product called the VIX. Color's just not working for me tonight. All right, we're switching colors. Okay, we're switching from missiles. We're going to guns. VIX. That's not bad, huh? Nah, wait. Oh, we're getting even crazier. Oh, that one's nice. Okay, so come on. The color we use is very important. So this could be any old stock. It doesn't matter. But let's make this tonight something like the SPY. Okay, I know that the spider is closer to 300, but let's say the spider is trading at 100. And that spider happens to have 20% vol. What's 20% vol really mean? It means standard deviation. So first of all, there's 2 types of volatility. There's what we term implied vol, okay? And there's historic vol. So implied vol and historic vol. What the VIX looks at is really implied vol. What's implied vol? It's a volatility related to options. What's historic vol? Historic vol is actual stock price movement. So when people talk about volatility, what they're really talking about is confusing because you don't know if they're talking about historical vol or implied vol. Tonight, we're going to talk more about in the implied vol. And that's actually the volatility that most option traders would worry about. Now, if you don't trade options, I get it, but that's fine. But here, why is the implied volatility so important? First of all, the volatility of 20%, it means that this stock, which is the SPY, it's an ETF, can go up 20% or down about 20%. And it's supposed to stay in that range about 68% of the time. But the volatility of the spider, okay, is the VIX. And you're like, what? Okay, well, really the definition is the SPX. The SPX, though, when the spiders are kind of joined at the hip, but the volatility of the spiders is the VIX. People are like, what is the VIX? Okay, well, the VIX is a measurement of option volatility in the SPX. It is what it is. Okay, and I just throw this slide up here because there's a lack of understanding of just what volatility happens to me. And all I want you to know at this point, okay, volatility can be extrapolated to stock price movement. So if you think about this, higher volatility is going to be what? More movement on the curve. So the higher volatility is. You know what volatility is right now? It's 12. Okay? Volatility in the S&P is 12. That's what the VIX happens to be right now, is 12. So what is it saying about markets right now? They're not supposed to be doing what? They're not supposed to be moving that much. Ironically, they're kind of moving a lot. They're moving up. But let's continue on, okay? Now, little background, little VIX background, because we're going to talk a little bit about the VIX. The VIX started as a calculation of implied volatility of the SPX option. Since its introduction in 1993, the VIX has been considered by many to be the world's premier barometer of investor sentiment and market volatility. In 2006, the options, okay, on the SIBO, the VIX volatility, all right? So the volatility index, the VIX, began trading on the SIBO options exchange. So Chicago Board Options Exchange had a volatility index, and they actually started only trading in 2006. But the calculation from the VIX has actually been back even prior to that. The VIX index is implied volatility index that measures the market's expectation of 30-day, S&P 500 volatility. Now, when I said S&P 500 volatility, that volatility right there, it really relates to what? To what product? Well, that volatility really relates to the SPX. That's what the VIX is measuring, okay? Implicit in the prices of the near-term S&P 500 options. So there's a lot of people that look at the VIX and they're like, but I don't even trade options. But that's okay. I get it. But the VIX is still incredibly important. Now, we're going to actually show you how to trade the VIX. Just have a little background on it. A little more background. Markets down, VIX up. For the most part, one of the other concepts that we have to kind of get to that very few people really understand this logic is volatility, okay? Let's say, again, is 20%. And let's say that this is a $300 product. It's the spiders. Okay, the spiders is just a softer, gentler, kinder version of the SPX. But what happens if this market starts to rally up? So the market goes from 300 and shoots all the way up here to let's say 310. Where does this volatility go? Inherently, as the market goes up, typically volatility would go down, right? It would drop. Let's say volatility was at 20% and it's not there right now, but say it drops all the way down with a $10 move in the spiders, drops all the way down, we'll say to 15%. On the flip side, and this is important, this is very important, on the flip side, the market sells off. If the market sells off, okay, for example, to 290, where does volatility go? Well, a $10 move to the downside, this volatility may spike all the way to 30%. And you're looking at this and you're like, wait, so if the market rallies, it only drops by 5. Got it? But if the market sells off, everybody freaks out and it shoots up by 10. That's one really important concept that very few people understand, and it's imperative to your longer-term success in these products, okay? That the marketplace itself, so right now, we actually have a VIX. There's the VIX, and it's 12. So if the market continues to rally up versus the market selling off, what can the VIX do? It can drop from 12. Oh, it goes all the way down to 10. Okay, so if the market continues to rally, listen, here's the spiders at 290. So the market goes all the way to 300. Let's get crazy. It's a $10 move to the upside. The VIX contracts by a whopping $2. Got it? The market sells off big. Okay, what's big? This is kind of fun because I'm going to say only goes to 280. But that's a $10 move, Don. It's the same $10 move to the upside. Yeah, but if the market goes down to 280, a VIX may spike all the way up to 18. Now think about that. Look at the risk reward in here. Okay, 2 to 6. That's what very few people understand about the VIX. It's that simple. The market's down, VIX up. Interesting irony also. Okay, the last few days, the market's been up, and the VIX has actually been flat. So the VIX, it ain't exactly what you think it is. Now, let's continue on. Are we having fun yet? Come on, we're cruising along at a pretty good pace. Just want to make sure everybody's good. So, because, as I said, you got questions, hey, ask them or forever hold your peace. Let's get to some myths of volatility. Busting the myths of volatility. First of all, charting the VIX. I love to bust a couple of myths before we get into detailed of trading. Okay? And I think that this is important to say the least. Let's kind of continue on with this. So, contrary to popular belief, looking at a chart of the VIX, will not tell you when or where volatility will strike. So there's been a ton of studies on this one. And if you're looking for when volatility is going to strike, nothing, nothing on the VIX chart relates to where volatility is going to strike or when. In fact, those charting the VIX, you should also know that the equation used to determine the VIX has actually been changed subsequently many, many times. More than several times. The VIX equation has been changed a number of times. It's kind of ironic. Why? So here's a VIX chart. As I said, the VIX lately has been right in and around. Just this is a five. Just so we're all clear, this is a 5-year chart of the VIX. It's a 5-year chart of the VIX. This is right where we're currently at. And interestingly enough, the market's at an all-time high. And if you look very carefully in here, the VIX has actually popped up slightly, but it's found almost like a floor at that 12 region. So lots of people, they studied the VIX and like, I was running a MACD, I was running a Fibonacci, I got my Bollinger Bands on the VIX. Yeah, really? Because you're not going to appreciate what I'm about to show you. The VIX changed the calculation in 2014. Yeah, I'm aware that every major financial news media outlet shows charts of the VIX comparing volatility for the last 20 years. Even the Fed does it sometimes. The Fed's like, well, the volatility of the overall market is, low. We don't see any systemic risk on the forefront. They all talk about it. Someone should point out that the VIX most recent change in the calculation came on October 6, 2014. Yeah, you know what? You can check that crap out because they completely changed how they calculate the VIX. What did they change in 2014? They started using weekly options for those of you that speak geek. Okay? Out with the old and in with the new. The new VIX calculation can differ from the old calculation as much as plus or minus 10% per day. So much for charting the VIX or comparing it to the past because it's worthless. In fact, if you really want to look at this, go look at it yourself. The old VIX can be charted with symbol VIX-MO. Monthly VIX is what it means, VIX-MO. So you can actually look at the old symbol for the VIX under VIX-MO and you'll actually see the differentiation of it. And yet it's okay because the whole world likes to chart this stuff. Just amazing. Anyway, let's kind of continue so we're looking at like some myths. The next myth, buying calls, okay, and call options in the VIX will make you money. The second and probably most costly mistake made in the VIX options. Traders buy call options assuming volatility will go up. People just buy an option and they're like, I think vol is going to go up, okay? But there ain't no free lunch. Even when volatility goes up, call options may not drastically increase in price. Wild volatility swings are already priced into VIX options, and buying calls can be a blatant reminder that there is no free lunch in the markets. No free lunch. No soup for you. My favorite example. You know what? It's an older example, but I have to tell you, it's my favorite example ever of VIX options because it was Brexit and everybody was like looking at Brexit and there was a lot of risk and a lot of apprehension around Brexit. And it was this vote, but here's an example, assuming that you timed the purchase of call options perfectly. Okay? So perfectly is the key over here. So let's actually take you through an old VIX trade because I want to show you like some of the myths of this product because people try to profit from this stuff and they lose money. Okay, here's the VIX Brexit example. And the reason I harp on this, I just absolutely love it. And the reason I want to cover the Brexit vote is because, well, there's an election coming up in November here, and we're actually going to place a trade for it. When? Today. You'll see. We're actually going to show you a trade today for the election. So I wanted to use the Brexit vote. So this is just days before the Brexit vote. Okay? Just days before. There it is. And days before, the VIX had already kind of taken off to the upside. So like the VIX was up to 19. Why? Because people are like, I'm a little apprehensive over this whole, Brexit thing. There was a small chance that the whole Brexit thing might happen. So if you went out and you bought calls, just purchased like the at the money calls, they were trading right for around, we'll call it 290. Okay. You're anticipating a rise in volatility. Buy a call. What's a call give you the right to do? Gives you the right to buy the VIX at 19. Okay. Do you have to own the VIX? No, there is no VIX to really own. It's a cash settled product, but you're buying a call. Why are you buying a call? Because you think that the product is going to go where? Up. Now check this out for a second. So you buy a call And you know what? For those of you that know this, well, Brexit, the vote happened. Okay, the volatility actually spiked. Now check this out. When I say the timing is absolutely perfect, okay, the VIX spiked, what? 2 days after I did this example, the VIX spiked up $5 in a day, 30% spike. Your option went from 290, okay, to a meager 480. You're like, but you made money. It's 30% move in a product, okay? You didn't even make 100% on the trade. I just wanted to show you because people have this like misunderstanding of what the VIX is. You can't go out and just buy outright calls in the VIX and think you're going to hit one out of the park because you're not. That's why I took you through this example because it's a huge, huge error, okay, on the part of most traders. They just go out and buy VIX options. And by the way, 15 years in the brokerage world, after these options released in 2006, the VIX was the most, okay, misinterpreted product of any product available at my time at both thinkorswim and TD Ameritrade, because this is exactly why. People would buy, okay, calls, market would just tank, the VIX would fly, and they wouldn't make any money. I mean, I remember people back in 2008 that barely made any money. Why? Okay, because you can't make money just buying a call. You got to get a little bit smarter than that. Okay, perfect timing, poor results. The aforementioned example, okay, it assumed near perfect timing on entering into the purchase of a call option on the VIX and still makes a minimal percentage return. What did you do? Right place, wrong strategy. You were the right place, the right time, the wrong strategy. The timing, perfect. Okay? You were right on. It's all about the wrong strategy. The right strategy for the VIX. Let's teach you a strategy whereby out-of-pocket cost is zero. Okay? And you can make big potential percentage profits. Sound reasonable? Anybody? Anybody? Okay? Anybody on that one? By the way, these are the VIX, just so we're all clear again, before we go any further, what I'm about to show you, this is the strategy that is being used by all these big trading firms out there. And I want to show you again, because somebody picked up on this a moment ago, and they said, look at all the volume in there. Yeah, look at the volume. It's insanely high volume. Okay? This is just prior to Brexit. And the fact of the matter is, just prior to Brexit, okay, there's huge. Every trading firm in the world is using these products. Why are you not? Because people don't know how to use them effectively. Okay? This is what you got to do. So, here's what you need to learn. There are several effective strategies in trading the VIX options, both to reduce risk and as a means to profit from a market decline. Okay? Here's one of them. This is the VIX volatility spread. Now, I'm going to keep this one, okay, kind of low key, fairly straightforward. I'm going to explain it in a couple of different contexts. Okay, this is a real trade. This is a trade that I priced today, took the screenshot today. It's a trade that I happen to have on, okay, a multitude of different variations of it in a multitude of different expirations. But in the VIX volatility spread, and again, I'm going to explain all the little nuances of it. All right, and we're going to take you through it. I'm even going to show you how you can profit, how you can lose, everything. What the trade breaks down to, first of all, the trade is actually put on, and you're looking at that, you're like, huh? I don't know if I understand. Ruh-roh. Okay? The trade is put on right there for zero. That means your out-of-pocket cost is zero for the trade. Why? What we're doing is we're selling, okay, a 13 put. Why do we sell a 13 put? We're selling a 13 put. Let's say, for example, that the 13 put, okay, we can collect 70 cents for it. We're selling the put to finance the purchase of a call spread. Okay? So we're taking the credit from the put. Then we're going out there and buying a 17 call. And then, okay, we're going to buy the 17 call. And we're going to offset the price of the 17 call by selling a 21 call. Net, apparently that's going to cost me right around 70 cents. Okay? The net trade is for zero. Got it? Sell a 13 put to actually finance this. Now, does selling a put have risk? Yes, it does. Let's take a look at that here momentarily. Okay? By the way, zero That's the right answer. Now, is there margin held? Yep, but I'll talk about margin as well. Let's look at the risk graph of this, because sometimes it helps kind of visualize the trade this way. Okay, risk graph of the spread. First of all, the VIX right now, right around this range. Okay, that's where the VIX is currently sitting. So is there upside to the strategy? Yeah. Okay, starting at about the level of 17 and then all the way up here to 21, because that's your spread. That means you can make money from 17 to 21 on the VIX. What upside is there? There's $4. So if you do one contract, that's equivalent to $400. Now, let's talk about the risk. I think that the call spread kind of makes sense, right? I'm buying the 17 call, but I'm selling the 21 call. And the spread, it's absolutely imperative that you trade spreads. Like some people are like, I sold a VIX put and just bought a call with the money. Don't do that crap. You need the spread, because the spread is offsetting all your volatility risk on the VIX itself. I cannot stress this enough. Get this strategy, you get it wrong, and it'll never pay off. Okay? So again, this strategy starts to pay off above 17. It maximizes at 21. So do you have limitations? Yeah, but your limitation is $4. And you're like, I don't like that. Good. Do more than one contract. How hard is that? Okay? Do more than one contract. Do 10 contracts. Then it's $4,000. Okay? You can actually fine tune this. But let's talk about the risk. What happens if the VIX starts to go down? You're like, oh, I can lose money. Yeah, well, there's actually something you can do with that. It's called a roll. You're like, what? Okay, minimal risk. The VIX right now is at 12. So I'm selling a 13, but what can you actually do? If this trade goes against you, what can you do? Now we're actually showing an options chain. You're like, what? All right, don't panic. Breathe, people, breathe. This is the strategy below. The strategy below was selling this little monkey right here. Okay? We're selling those 13s to turn around and buy those 17s and then sell, okay, these 21s. And you can see the exact prices. Okay? This one's trading for about $1.90. This little monkey's trading for what? Okay? Right in the neighborhood of about $1.25. This little monkey's trading for 65 cents. Put it all together, what do you get? Okay? You get zero, because that's what the trade will cost you, okay, up front. Now, imperative, though, to kind of follow along with this one. I'm going to even change the color. So, I love the questions that are coming in here. Somebody goes, why did you use a $4 wide spread? I have an answer for that. There's a class for this. Why a $4 wide spread? Yeah, you have to know exactly what spread to place. And by the way, somebody's like, why November? Ooh, I got an answer for that too. Okay? You can go to a class. No, actually, November, the reason I did the example in November, there's an election coming up that's actually encompassed in here. And you would think at some point between now and the election, there might be a little apprehension and the VIX may take off to the upside. Okay? Come on, it's been calm out there. But who cares? Even if it's not calm. Let's say that the VIX continues down, like the VIX is at 12, and you have this 13 put that you sold. At any point, if you're nervous of this 13 put, you can wait to the day before expiration. You can take this 13 put, and you can then move it out to December. It's called a roll. And you can actually receive a credit for it. So eventually, see, here's the cool thing about the VIX. Eventually, the VIX goes up. And when the VIX does go up, okay, you're not really going to assume too much risk on those 13s, are you? How do you avoid the risk on the 13s? You just learn how to roll the strategy. Roll it out. So when you start to look at the risk graph, this thing is gravy. It's a nice trade. Okay? This is why these trading firms are doing it. Because what the trading firms are trying to do is they're hedging their downside market risk. Because if a trading firm owns, for instance, a ton of spiders, if the spiders start to tank, what do? Well, they have VIX volatility spreads on. Go look at the VIX right now on your own if you've got a platform open. Okay? Go look at the contract size in the VIX. You're like, this doesn't even make sense. The VIX trades, it's one of the heaviest contract sizes in the entire marketplace. That's because it's every big trading firm in the world doing a strategy like this. And the cool thing is they know exactly, if the market tanks, they know exactly what they're going to profit from on this strategy. Will that help you, okay, engaging your risk in a 401k? Absolutely. Would it help you reduce your risk in your IRA? Of course it would. Would it help you, though, it just to know that you just put this on? I don't care if you have a $3,000 account. You do a couple of contracts of this, and you're fine. By the way, I can also reduce all the margin of this. We can buy a out-of-the-money worthless put and reduce the margin on it. This trade, by the way, can be done. This trade can be done in a tax-deferred account. If you have an IRA, you could trade this in an IRA. Okay? You should be able to. Why? Because it's a risk reduction strategy. Okay? And I got to stress that. So, and then of course questions come in, why do I use this? Why do I use the VIX and not the VXX? You know what, John, I hope you don't mind me saying this, but I'm going to tell you exactly why I use this. If you're in a taxable account, you really want to know why? Okay? If you're in a taxable account, first of all, the VIX has no product behind it. It's cash settled, and it follows Rule 1256, the 60/40 rule for taxes. It's better tax implications. The VXX is crap. It is, because you can get assigned early, forget all that stuff. You got to learn how to do this product. This is the product that the professionals trade, okay? And it's a fair and level playing field. You want to see a VIX volatility spread in action? Here's one in action. Now, we all know that the marketplace kind of tanked in the beginning of this year. But you see, I used the VIX volatility spread. This is the exact day that I placed the VIX volatility spread, the exact time. Okay? The only thing I'm hiding from you is my contract size. Because I don't think people are like, well, you did 100 contracts. Doesn't matter. I use the trade as a hedge. And this particular trade was a hedge. So I went out and used the VIX volatility spread. And I was actually hedging positions. This is the exact time that I closed it. Now, remind you, the marketplace tanked, okay? Really, really tanked when? Okay? When did the marketplace effectively tank? It was actually early February. I didn't close the trade. I didn't time it perfectly. There's no timing involved in this. I closed the thing March 1st for $3.47 credit. Now, how much risk did I have in the trade? Pretty negligible for a $3.47 credit. That's what we call knocking it out of the park on a trade that I actually put on. And again, those are the effective and the exact prices used for this strategy. Okay? But when you're looking at this, and by the way, I love the questions that are actually flying into the room right now, which is great. And here's some of the characteristics of the VIX volatility spread. First of all, this trade is undeniable. Whether you're trying to hit it out of the park or whether you're trying to, reduce risk, you're basically risking one to be able to make four with a 60% probability of not losing anything. The VIX volatility spread can work in down markets. It can work in neutral markets. It can even work in a trending bullish market. That's not going to kill you. This is why the trading firms like this. Okay. And people always say, well, when do I put one of these on? Now? Why not? Come on. The VIX is at 12. Why not put it on now? Okay, I'm not trying to time anything. I just told you earlier, you're never going to be able to time, a market tanking. I know everybody believes it's a top, it's a bottom. Okay, listen, I don't really care. All I know is sooner or later, volatility spikes. And when it does spike, I want to be there. That's it. I want to be there. Okay, and you have to have a trade like this. Why? Because you're going to pay nothing up front for the VIX trade. You never have to buy a stock or worry about option assignment risks. There's no early exercise assignment because it's VIX. The risk is minimal. You don't need no stinking stop orders. And it's an excellent tool for those, if you have a smaller account, you want to build up an account, it only takes one decent VIX volatility spread to explode. And, you're going to be good to go. Building the VIX volatility spread. Don't let this option stuff intimidate you. Okay? But this spread, it's a beast. It is absolutely a beast. Let's also clarify, this thing is the 800-pound gorilla in the room. Use it correctly, it's extremely effective in creating returns. Use incorrectly, you're going to cut off a couple of fingers because it is the 800-pound gorilla in the room. The VIX volatility spread is being done for no out-of-pocket cost. Again, it's going to tie up a little bit of margin over here, but hey, listen, you have to have something at risk, okay? It's, again, as I always say, there ain't no free lunch in this, okay? And as I said, there is no risk of early assignment. It's totally cash settlement. There's no risk of early exercise or assignment. It's the purest, fastest, cleanest way to get where you want to go in this business. A little bit about what our customers are saying, and I threw this in here because first off, I want to say thank you how much I appreciate all of you done at TheoTrade. I've learned so much past few months. I was pretty much up to speed on concepts regarding volatility and spread trading, but you've opened my eyes to see much more, okay? Felt like a newbie again. And we'll take you trading to entirely new levels, okay? It's been an amazing past 6 months. Keep up the great work. Fear not the VIX volatility spread. And you know what? I threw this in here because specifically volatility, that, you know, in terms of the different instructors here at TheoTrade, volatility, that's my forte. VIX volatility and the VIX itself, that's my forte. That's where I grew up. Fear not the VIX volatility spread. If you don't know anything about options, don't worry about it. We can actually show you how to place a VIX volatility spread. We do a class on this, okay? And it takes a couple of hours, but it's worthwhile. There's a recipe in the class that teaches you all the what ifs. Okay. What if the market tanks? What if the market does this? What am I supposed to make? What month do I select? How wide should the spread be? Okay. I break everything down to recipes, and I always talk about recipes and I always talk about criteria because you know what? You can go anywhere and learn a strategy. All right. In fact, you know what? You don't even have to go anywhere. Just go on Google and you can learn a strategy. What they don't teach you though on Google, specifics. Okay. They don't teach you what, you know, people because always say, oh, how come I'm not doing this? Okay. Because you don't know when to put it on. You don't know what expiration is like. You don't know what strikes to use. You don't know position sizing. Oh, let me tell you something about position sizing. That crap is important in here. Okay. That's the what ifs. You have to learn how to execute the trade. When do I exit? What do I do in a losing position? You better learn to roll. In fact, we even place these trades. We place these trades live at TheoTrade. We just place them. Like, how do we do that? Well, we email you and say, here's a trade. Criteria. That's what we do. Because this is the answer to the question. Why doesn't everybody do this? Because not everybody has that criteria. Okay? Trading, it's always going to be answering what ifs. If we tank, if we rally, a losing position, strike prices, you know, how much capital do you commit to VIX volatility spreads? And we have those answers. We give you the right probability for the trade. We give you the exact contract size. We'll give you when to close it. What if the markets sell off big? What's the correct return for the strategy? Okay. If we rally massively, can you fix a losing trade in a roll? I already told you that one. Okay. We have the answer to all of it. And we build recipes, okay, with definitive criteria. The criteria is just a checklist. You know, when I say it's a checklist, it's a pre-flight checklist. But once you're in the trade, then it actually gives you variables for closing. The markets are not that bad. It can go up, it can go down, it can go flat. Time goes on. But we have checklists for each one of those variables. The how, the when, the why, at what price. Okay. And whenever I show people this trade for the first time, or really a lot of the trades, okay, you kind of feel like somewhere between one of these, you're either pulling your hair out or you're pulling your hair out. There's so many questions involved in like a VIX volatility spread because there are so many variables in here. And if you feel like right now you're like, I'm overwhelmed, good. Because that's what we do here is we cut the overwhelmness by actually giving you what? Years of experience, okay, and criteria. The secret, it's in the sauce. You can read about VIX volatility spreads, okay? But the criteria is the utmost attention to detail, and that's really where we spent years, okay? This is the curriculum for the VIX class. Okay, and I mentioned a class a couple of moments ago. We've got a class on a lot of different strategies. This one, I feel pretty strongly about, especially right now. That's why I'm saying we're hosting this session tonight because this is what's opportunistic right now. Okay, you can use VIX options, risk 1 to be able to make 4. Okay, you really want to see what the professionals do. All right, in terms of understanding volatility, this is the class for you. Entry and exit criteria, okay? You're never going to guess what options to trade. We're also going to use what we call set and forget methodology, which is a good till canceled order. Let's just clarify that. Like the set and forget, you don't have to sit here and monitor your positions. We can use what's called a GTC order for this strategy. You can trade the VIX options with minimal risk and high potential for reward in here. You can trade VIX and, a retirement account. Protect your nest egg. Okay? And again, I can go on all day. If you have a small account, you're looking for big upside potential, great strategy. What strikes, what expiration period, all of it give you the highest probability for success in VIX options trading. That people, is the VIX options curriculum for this course. The course, the VIX, it's again called Trading VIX Options course. I was the instructor for this course, and I say was. This one, it's already archived. It's ready to go. And it is an incredibly pertinent to right now, right? We like to pre-record courses because people like to come out and they like, tonight they're like, I don't want to wait. I want this right now. Good. You can download the slide deck right now. You just download, it's entry and exit criteria, the checklist. It's available immediately for download. The course is actually slightly beyond 3 hours. It has 24/7 access, and the course itself qualifies you for reduced commission rate. Cost of the class is $197. Okay? We have an offer, though, for you this evening. And again, I stressed you, the VIX options course ain't going to let you down. I think you guys will absolutely love this entire course. I gave you a trade tonight, but I'm telling you, if you want to learn the nuts and bolts behind that trade, you think it's not worth what? $197? People, this class is worth easily $3,000. I used to do classes, okay, years and years ago, okay? Even before TD Ameritrade and before thinkorswim, I did a couple classes. People paid $3,000 for a 2-day class, and we taught the exact same stuff, okay? Literally, like it was even before the VIX options. We taught a variation of this in the SPX, okay? Now we have VIX options that are cash settlement. Class is $197. It's the same thing. It was $3,000. It's worth every single penny. But a lot of people always feel like, you've been there, you've done that. If you've been tuning in, right, we find that a lot of the people that come to us here at TheoTrade, and please, by all means, chime in. You've been through the gauntlet of paid classes. Huh? How many of you guys have actually been through the gauntlet of paid classes? Anybody, okay? Anybody. So you've been through the gauntlet of paid classes. You've had indicators, the secret squirrel black boxes, and much more. And then, of course, they go, only to find, buy this one last thing to make all the difference. But wait, there's more. We are a little bit unique here at TheoTrade, okay? Do we want, okay, you to be involved with TheoTrade? Do we want you to see the VIX class? Absolutely, okay? Can we just hand everything to you for free? No. In the end, okay, we've got a very interesting business that we run here at TheoTrade. And I'm actually going to show you something that is vastly unique, and we've changed the way, okay, that financial education is brought to you. We've had enough of educational garbage and sales pitches, and we just put an end to all of it, okay? We do everything, and we do it at one price. And we're here, and we're designed to really disrupt financial education. We're built by professional traders. Everybody on this crew has a minimum of 15 years of experience. We don't have any professional salespeople. Okay, no one here at TheoTrade has a background in sales of any kind. They've never worked in any sales positions. They're all traders. Educating you is our only goal, and we demonstrate that. And I'm going to demonstrate it right now. We'll hopefully change the way that you view education in this business. We introduced to you a class for $197. Now we're going to introduce you TotalTheo, unlimited streaming monthly membership. We call this the Netflix, okay, of trading. Why? It's $99 a month. No, the VIX course that we just detailed, it's included. It's $99 a month. What do you get for $99 a month? Well, you get the class. Do you think that's worth it? Because the class was $197. But if you just pay $99 a month, okay, you're like, whoa, per month? Yeah, but if you want to check us out for a month, you can do that. It's okay. By the way, not only for $99 a month, do you get access to the class? Absolutely. Yes, but you get access to everything. All classes that we've ever done. There's over 70 trading classes in here. There's new monthly classes. Just so you guys know, in September, we already have 3 classes on the schedule. I'm doing a class. Matt Williamson's doing a class. Jeff Bierman is doing a class. October, forget it. We're totally packed. Guys, it's unbelievable. Oh, on top of it, we have a live trading chat room. I know lots of places will charge $299 a month just for live trading. Yeah, forget that crap. It's included. It's $99 a month. So you get the classes. Okay, we broadcast live, but people are like, I can't watch 6 hours a day, Don. You don't have to watch 6 hours a day. We email out trade ideas. Okay, we have daily coaching sessions, and everything is archived. Everything is archived. It's available 24/7. Okay, we archive everything. We archive it pretty much in real time too. Here's also another fun one. For those of you, I was making fun of the indicators earlier. We have 59 proprietary indicators and scans. It's all available to you. Oh yeah, and we get a different kind of discount at the brokerage firms. It's TheoTrade.com/all. I'll tell you right now, people, do you have a trial? Yeah, the trial's $99. Okay, you ain't going wrong for $99. How many classes can you watch in a month? Make it Netflix, binge watch, but watch the VIX options course right now. The VIX options course kind of gets lost in this a little bit, but that's what you're here for. That's what you want to learn tonight. Now, a little bit, again, I'm going to answer some questions in a moment. Okay. And you know what? Somebody said it. No free lunch. That's exactly right. For $99 though, I'll tell you what, you come here for $99. I want you to email me. I don't care if it's a day from now, a week from now. You watch a couple of classes that we have on there, and I'll show you a few classes. You tell me it's not the best education you've ever had. Okay. There's a class that we originally sold for over $1,000 in the archive. I'll show you exactly which class it is. We sold it for over $1,000, okay? And we sold hundreds of them. That's not what we're about. All we had to do is just build up the archive enough to just basically stream out. And by the way, the more clients that we get here, the more instructors. The more instructors that we're bringing on, incredible. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together, sharing knowledge, and not upselling everything and, turning and burning your customer base. You got a customer for life because of this approach. And I'm sure I'm not the only one. That's important to us. Again, people have all been through this crap of I got to sell another indicator. We're not that way. Okay. What you guys are going to learn is absolutely going to shock you. And by the way, this is my favorite one. Hopefully this doesn't offend anybody, but it's absolutely my favorite one. So amazing what we learn when we listen. Thanks to my ex-wife for this quote. Don's a wonderful teacher. I've really enjoyed listening and learning from him the last few months. I love how Don goes about explaining and showing me how to go through some of the mechanics. So I'm sorry, people, but that was my favorite one. All right. It's amazing what we learn when we listen. Learned that from an ex-wife. I think I had a teacher that said that to me. But hey, listen. We're giving you $100. Take the money. When I say we're giving you $100, if you want to go to the VIX options course, fine. You can go to the VIX options course, but we're going to charge you $197. It's a one-time fee, and you get VIX options course. If you want to go unlimited streaming, this is do you want to buy the movie? Okay. Or on Netflix, do you just want to stream everything and go hog wild? Go hog wild. That's why we're giving you the $100. Just go hog wild. Watch everything you possibly can. You guys want to see some of the classes? Before I show you some of the classes, it's important I bring up this address. It's TheoTrade.com/all. One of the questions that has already come up, can you cancel at any time? Of course you can. If you can cancel any time, it's $99 a month, right? And I'll cover that a little bit. But if you want to see what TheoTrade is about, what it looks like, again, TheoTrade.com/all. But let me show you what TheoTrade is. Okay, let me show you. Let me explain a little something in here. So I apologize. I think I just killed my my screen for a moment. Oh, that's working very effectively. All right, I'm going to reopen that one. Here we go. Perfect. So this is you are watching TheoTrade. When I say you're watching TheoTrade, there's actually a live chat going on right now. So we do a Wednesday night class. It's going on. There's people in here. See? Okay, and we'll say hi. Okay, and I'll delete that out. I don't want to freak anybody out in there. Anyway, this is a live chat that's going on right now. We do a Wednesday night seminar. This is the member home, okay, and everything that you have access to. But as I promised a moment ago, I want to show you, what we have in here before we go any further. Come to start here. If you're brand new to this business, and you don't know where to start, we have a start here area in our menu. Options 101, 201, options 301. This is all part of the archive. Okay? That enough for you to get you ramped up? We have you covered. Now, you want to know about the classes. What do the classes look like? Well, let's go into the class archive. So all I did is I went down to classes. I'm clicking on classes. We've really improved this lately. What do you want to be when you grow up? Option strategies? Technical analysis? Are you a day trader? Stocks, futures, hedging strategies? Okay? Let me click on hedging strategies for a second because I feel these are important. Okay? Here's surviving extreme volatility. The next big short. Okay? Capital allocation and hedging. Right? This is the atomic hedge. We're having fun now, right? If you go under option strategies, you have access, by the way, from day one at 99 bucks, all of it. Each one of these classes, go to any other education firm, each one of these classes will cost you anywhere from $300 to $1,000 a piece. You want a class in iron condors? You got it. And if you're looking at this evening and you're thinking to yourself, wow, these guys, this is incredible, okay? It's a little bit overwhelming. But I think for $99 a month or even $1,000, okay, would you rather be overwhelmed or underwhelmed? And I think people want to be, a little bit overwhelmed. You're taken back by it. By the way, here's your Trading the VIX Volatility class. It's right here. So I'm showing it to you. Okay, the class is broken into two parts. Actually shows you the delta, trading VIX options. This is where you download the slide deck. Okay, it's gold. We also share with you all of our studies, our scans. It's everything. What's everything? Everything that you're going to need. All the scans, all the studies, 99 bucks. If you pay for 1 month, that's it. You have access to everything. We also have trades in here. If you want to see our trades, we have a duration portfolio and we have a trade tracker. It's all part of it. And then we have a searchable archive. We have Corey's Corner. We have daily reports that are coming out. It just goes on and on and on. Everything that you need, okay, under one roof. It's TheoTrade Unlimited monthly streaming. It's 99 bucks. Again, I like to call it kind of the Netflix of this financial world because, again, there's nobody that is comparable to the education at any price, by the way. I don't care if somebody's charging you. Listen, at TD Ameritrade, we owned the single largest education firm in the world, a stock market education firm in the world. Do you know what they used to charge for an 18-month program? They used to charge $24,000. Okay? You know who used to write a lot of those courses? Me. Okay? And a bunch of our staff used to write the courses for it. It's where I got a lot of the instructors. Yeah, we're no longer $24,000. We're 99 bucks a month. Okay? And that's why I tell you, you're not going to go wrong at $99 a month. I'm going to answer a few questions. Go to theotrade.com/all to enroll for it. Okay? And by the way, one class is beyond $99. There's just there's nothing comparable in this business at any price. And that's what I want you guys to understand. You're not going to be disappointed by any way, shape, or form over there. Okay? Cool question. What's a duration iron condor? It's an iron condor over duration. It's an iron condor that's for a longer period of time. It's actually a very cool strategy. You'll love that. Okay? By the way, somebody said, what after 2 or 3 months I want to cancel? Yeah, email us, cancel. It's fine. Actually, the first question that comes up, I'm going to answer this one. Is this a membership for $99 per month and can I cancel at any time? Yes. Okay. In fact, we're so convinced that you're going to love TheoTrade, okay, that we email you every month to warn you that we're going to charge you $99 a month. Why do we do that? Because most people, when they get the email that says, we're going to charge your card $99 a month, we remind you. How many gym memberships do that? 0. Has anybody ever warned you from Netflix about, you're going to get billed, per month? Drop the Netflix, go with TheoTrade. You'll enjoy it. Okay. People email us all the time. They're like, please, I want to keep on $99 a month, 99 bucks a month. Okay. Again, you can't go wrong. People always have a question about getting approved for options. We can help you get approved for options. Okay. We have a number of key brokerage firms that we work with. TD Ameritrade is one of them. All right. But we have a number of different brokerage firms and we have special commission rates. We never mention those live. Okay. The commission rates are pretty phenomenal though for retail clients. Okay. Yeah, you know what, Gary? There is a yearly subscription. If you want to pay $9.97 for the whole year, we're fine with that too. It's a little bit of a discount, but it is what it is. Yeah, it's a yearly subscription, and some people do elect to do that. We don't even really mention that today, but if you want to save a couple of bucks, you sign up for $9.97. Just we can shoot you a link for that. Anyway, let's kind of continue on this. Can you do all these strategies in an IRA? Absolutely. Somebody asked about the day trading margin rule. If you are a day trading margin rule, we can help you work around that. Okay. Everything that we do is recorded. Everything, every second, every instance is recorded here at TheoTrade. That is absolutely imperative. Okay. If you're working full time, fine, good. Okay. We'll email you trades from time to time, and you can also watch any of the archives, and we have nightly reports out there. It's all encompassed, theotrade.com/all. We'll be here for a few minutes to type in, okay, and answer a couple of your questions. I thank everybody for joining us this evening. Have a wonderful evening, everybody. Bye-bye.